Hey, what's up? It's been a long time since I made a video, but I figured I'd put one out about a current position I'm holding in electric vehicle maker NIO. So, following its IPO, NIO faced some significant challenges, including a huge cash crunch, along with declining demand for its cars in its target market. However, this all turned around when NIO received a pretty massive cash infusion of $1 billion from investors, which set in motion the huge trend that we're seeing today. So, how about we go through the historical price action on the daily chart and see what we can learn from it. Okay, so let's take a look at the daily chart on NIO and see what we can come up with. So, looking at the daily price action already, we can see prior to May 25th, there wasn't really all that much interest in NIO, and it was likely due to those issues that I mentioned before that it was facing. However, once it did get that big institutional support of $1 billion, all those problems have basically more or less faded away. So, looking at the price action, we can see that we have, and I'll just turn on my marker right here to make this a little bit more obvious, a price level here at $4.32. You can see we came up all the way back here in December, pushed through it, and then on the next day right here, I'll just highlight it, we had a smaller candle on lower volume, basically creating what is called a micro double top. And what that is when you have 2 days where the highs of the candles are more or less the same and they're back to back, right? It's comparable to just like any old double top where you have a price action that goes up, retraces, comes back up, and then does whatever it's going to do. So let's just get rid of that. In this case, it's just 2 days back to back. Okay, and then you can actually see we did come down and then push back up and retested that high again on this day right here. The following day, we did come down to the 20 EMA, which is in blue, where we found some support, likely due to this area right here, where there was buyers, probably with orders standing by, ready to buy in, which pushed the price back up to this level here. For the most part, I'm not going to get into too much detail about this area, but you can see we really did chop around. We had this high here, and then following all this chop in this section right here, we retested that high, creating a slightly lower high. So far, there isn't too much interest in this stock. You can also see on this day right here, volume was increased. Let me go back to my marker. You can see in this area, volume was increasing. So even despite that, like we couldn't get through that level. And then through this whole chop area, volume had really decreased. Again, not really showing too much interest. Following these two small red days here, we did have an increase in volume right here. But again, it wasn't enough to bring us past this point here in price. From there, we came down, retested the lows around here, again showing that there was still some buying supporting the price there. And then again, more chop, right? So really not too much of interest in this area. However, I will say that what led to the what led to the breakout was, you can see here, right, on this day, and I'm going to go back to my marker. Boop. You can see here we had this low, which was around this area here. We came up, tested the 9, came back down, created a double bottom, came up again, and then we had this low here. And then you can see the lows progressively started walking their way up. And this is a really good thing, right? So this is basically the beginning of the trend that we're now experiencing today. You can see right here on this day, we did come up to that $4.32 mark, give or take. Now, one thing that's really important to consider as well is that support and resistance zones Also, you could call them, if you want to use economic terms instead of technical analysis terms, is demand and supply zones. You shouldn't think of them as being an exact point. Really what they are areas, right? So I mean, you could say, you know, like this whole area right here is an area of demand, and you could say that this area right here is an area of supply, right? Let me just mute my phone before this thing goes crazy. There we go. Cool. Let me clean up this chart a bit. So basically what we're seeing is not really too much happening in terms of volume. It's more or less flat. However, the price is slowly starting to creep up. You can see right here, we have resistance. Now, what becomes interesting is when we do get up to this $3.80 mark is right here on these candles. I'm going to go back to where is it? You can see right here on this day and this day, volume does expand. And these two candles close on their highs, which is a really good sign that a breakout might happen, right? When you're looking for a breakout out of consolidation period, or, you know, like when the price is just going sideways, you want to see an expansion of volume. You need that expansion of volume. Furthermore, you want to see candles closing at or near their highs to really just indicate that there's strength in those moves, right? If there was really high volume, but the candles were closing near their lows, that's not a good sign. That's showing that there is a lot of supply there and there isn't enough buying going on to really push that price up and through. So with these two candles right here, we did come up to that supply or resistance zone. And what typically ends up happening is you have a lot of sellers at that area. So they're going to start triggering all their orders, which is going to push the price back down. And this is really just a retest of support, right? And if there is enough buying, what will happen is buyers will start to step up, which you can see right here, and they'll push that price right back up. And that's exactly what happened, right? So we had this $4.32 level right there. And you can see we had this big expansion of volume and we tore right through that. And that's what really began this trend. Now, again, we still have these resistance levels here as well, those supply levels right there. And you can see once we had that expansion of volume and that increase in volatility, we moved significantly far away from the 9 EMA. And generally what will happen when that occurs is if the trend is really strong, price will go sideways until it touches the 9 EMA. If it's weak, what will happen is you'll see it come up and then it's just going to drop right back down because short sellers will step in or people who are buying are going to sell their shares, and that's going to drive the price down. However, there was enough interest and motivation for buyers to buy that we didn't see that pullback really. It just went sideways, which is a good indication of strength. Now you can see with these upper wicks here, we have another micro double top, or tweezers top, if you want to call it that too. It's just another word for the same thing, showing that there's people trying to short at $7, or buyers are just taking their profits at that point. Don't really know for certain, probably a combination of both, right? So you can see we had that volume expansion, and then volume sort of during that consolidation decreased, which is pretty typical of a consolidation. And during this whole thing, volume more or less remained flat. However, price did continue to walk its way up, even though there was all this resistance at the $7 mark, right? And you can tell there's resistance because there's a lot of upper wicks, and the bodies of those candles, and the bodies being either the green or the red areas of the candles, are generally very small, right? So once we got up to this $8 mark, we had this candle right here. Let me see if I can do an arrow with my mouse. Nailed it. Of a shooting star. When you see a shooting star, especially if it's on higher volume, that's going to represent very likely reversal of trend, right? So what ended up happening is the next candle right here. Let's see if I can do another arrow. Maybe. Got it. Cool. Created what is called the bearish engulfing, right? Next candle, we actually broke through the 9 EMA, which could signal, again, a trend reversal. However, these three candles, which were these ones right down here, weren't really on enough volume. There wasn't enough interest in selling for it to really end that trend. Now you can see right here, the lows of these candles were progressively walking its way up. And this is more or less, let's zoom in a little bit, because I was going to say that's a channel, but it might actually be like an ascending triangle. So let's just get a little bit closer in there. So depending on how you want to look at that, you could say that that is an ascending triangle. Or you could say that that's, you know, an upwards channel, and then once it broke above, you had that breakout. So this leads to a good point. With technical analysis, it's as much an art as it is a science, right? Like, technical analysis is really just like a graphical representation of supply and demand. So, I mean, there's a lot of logic behind it, but there is, because it is graphical as well, there's going to be a lot of room for interpretation. So it's always good to understand that the way one person sees something might be completely different and contrary to the way someone else sees something. So everything that I'm saying here, take it for what it is, which is really just my perspective on this stuff. Anyways, let's clear up this chart because it's getting kind of messy, and let's go back and talk more about this. So at this point, when we had these higher lows that were kicking in, this area right here actually could have been a good area to buy, right? Especially since we see, we had this flat area of volume and then this decrease, and then volume was starting to tick up. So we have this candle, this day, and then this day with higher volume. Following day, we had a drop in volume, but at the same time, the candle was also smaller, which is totally fine. And just to make it a little bit more clear what I'm talking about, because I'm sure with my mouse moving all over the place, it might be a bit confusing. So I'm just going to go back to my pen. Oops. Okay. Lost my place for a second. So you can see this candle right here is very small, but again, so is the volume, right? Yeah. So that's totally fine. If there's a small candle with low volume, that's totally fine. That's probably a video for another day, but that's basically volume price analysis, where you compare the size of a candle to the volume that is backing it. Very quickly and very generally, if you have big candles, you want big volume. If you have small candles, you want small volume. And anything else is basically referred to as an anomaly. We'll get into that maybe in a separate video. Anyways, let's continue. So once we broke through, go back to my pen, that resistance point right there, you can see we had this huge move up. And the further we moved up, the further we became extended from the 9 EMA. So what do I mean by extended? Because this is a term that traders use all the time. Very important to understand. So with the 9 EMA here in purple, if you look at the price action, we have all this space, right, in between the 9 EMA. And that space, when that begins to increase, is referred to as the price being extended, right? Where the price isn't extended would be like an area such as right around here where the price is basically hugging the 9 EMA. And what this represents is something in statistics called mean reversion. So what is mean reversion? Okay, so let's say this line right here is represented by the number 10, right? And we'll say that 10 is the average anything. It could be 10 apples, 10 as a price, it could be 10 dogs, whatever you want, it doesn't matter, right? And what's going to happen is the number of these things, let's say it's 10 apples, begins to move away from that average, right? It's beginning to become extended because you have all this space here. In statistics, this concept of mean reversion suggests that if the average is here, what you can expect is that number to actually come back to that average. Now, what happens if it actually begins to drop? Well, same thing. You can expect, and this would also be extended in this case, the number to come back to that average, right? And it's just going to oscillate around that average. So when the price is really extended, probably not a good time to buy. Why? Because of mean reversion, right? You can expect the price to snap back to these moving averages. And lo and behold, that is exactly what happened. Now, if you also look at this, whoa, that was ugly. Let's go back. If you look at this uptrend right here, you can also see it was accompanied by a big increase in volume. And with a trend, you want to see that. You want to see volume expand in the direction of the trend. This is a really good thing. Now, you can also see the more it became extended, the more people wanted to sell. These are either buyers who are saying, okay, this is going up a lot. I'm getting kind of freaked out here. Time to take profit. Or it could also have been short sellers who are like, yeah, damn, like this is really getting up there. Good place to sell short and drive this price down and take my profits in that direction. And that's probably what happened right here on this day. Right now, obviously, can't say with any certainty, but if you also look at the candle, which is a very widespread candle, what do I mean by spread? Basically, the difference between the high price and the low price, there's a big difference in between. That you could say is the spread, right? You could also use the word range if you want to get into statistical terms. Both are good, right? And you can see that the body of that candle, which is the red part right here, I'm just going to clean this up a bit. Okay, just delete it all. Boom. It's very tiny. So what does that mean? Well, it means that there was a big battle between buyers and sellers, and it was so strong that it basically, they nullified each other. When the price is really extended from the 9 EMA, let's say, or whatever moving average you're using, and this happens where you have like a big range candle with a tiny little body, also known as a doji, that could be an indication that there's going to be a change in trend. Now, we did have another leg up, but it was on lower volume, so we didn't really get past this high. The next candle, we did create a new high, and the next candle, we did create another new high. But then, as you can see, mean reversion took place, and we snapped all the way back to the 20 EMA in blue. Now, typically with pullbacks and retracements, what you'll see is a pullback will probably be in the range of 50 to probably around 68% of this total move. And for people who use Fibonacci numbers or Fibonacci retracements, they're going to be looking at those areas for support and resistance or supply and demand, right? So we came back here, and I just created this this level right here, this horizontal line, just for my own indication, excuse me, of where there was buying interest. Because you can see, right, we came down to the 20 EMA, we popped back up, and then the next candle, we had this great big push up and almost went back to the high of the previous candle, right? And then from here, we came up, created a high here, and pushed back down. So from this low and this low, that created a double bottom. And personally, when I'm looking at double bottoms, I want the second low to be higher than the first, because then I know that there's definitely interest for buyers. If you have a low and then the next one is a lower low, then it's kind of like, is this a double bottom? Is this an area of demand, or is it just, a new low and there's a downtrend that's forming? So seeing this one be higher looks really good to me. I'm liking it so far. Let's also check out the volume. Cool. So you can see right here, we also had an increase in volume. And despite that increase compared to the previous days, we weren't really able to get past that 20 EMA. Cool. And then we go here and we can see volume was low, but it created a hammer candle, right? Where sellers drove the price down, but then buyers bought it all the way back up, creating that nice long lower wick. Now to further, let me go back to my pointer here. To further support that, we had 2 more days with lower wicks. Now they weren't relatively long compared to this first one right here, but it was showing that there was support, right? Price came up. You can see we had selling going on here, so we retested that area, drove the price back down. However, we created a higher low. So now the uptrend is starting to come back in. And then you can see on this candle right here, on the 3rd, go back to my, where are you? Where is it? Where is it? Where is it? There. I lost my place again. Hold up. Where are we at? Okay, right there. I'm just going to use this, otherwise I'm going to lose my place. You can see on this day and this day, looking at the volume down here, it was very low, and then we had this big increase in volume with this big candle that drove us past all of these previous days right here. You could also look at this area, and I'm going to clean up this chart a little bit. I'm going to go back to my pointer. You could look at this area and see that there is also a symmetrical triangle that is forming. And whoever studied technical analysis will know that symmetrical triangles generally have a decrease in volume when they're forming throughout this whole area here. And they tend to be continuation patterns too, right? So we had this uptrend here, symmetrical triangle, which is a continuation pattern, also consolidation pattern, if you want to use that term. And then we had a breakout. So this to me is saying, hey, this uptrend is still intact despite this sell-off. Let's clean this up again. Okay, so big candle, big volume with it, looking good so far. You can see on the next candle with this high right here, we retested the highs of these candles here. So you can pretty much bet at that point, I mean, obviously everything to the right of that doesn't yet exist, but you can look, right? You have a high here, and then a high here. So what that's basically saying is you've got selling going on at $14.50. Okay, fair enough. So what ends up happening? Price gets driven back down. Now, if you also look at this high and compare it to this 9 EMA right there, it's also extended. So what's going to happen? Mean reversion, right? From here, we push back up, have a doji, have, you can either call this a hammer, or I would probably call it a doji at the bottom, which is showing, again, buying support. So we tried to come up, retested that $14.50 area. Following day, we opened up, pushed up to here, retesting that $16.40 mark, and then we got driven right back down on pretty high volume relative to the previous days. Next day, hammer, hammer, doji, push up through that resistance there. And then again, look here, right? 1, 2, 3 days, 4 days, where we tested that $14.50 mark. And then I'm going to go back here. If you look down here at the 21st and 24th, volume was beginning to expand. Candles were getting bigger. And then look at this. Huge volume, right? On the 25th and the 26th. And let's check out those candles too. Look at that. That is huge. Now, the cool thing about the stock market is that prices are fractal. And what do I mean by that? And that is an ugly line. It means that you can have patterns inside of patterns. And I'm trying to draw the straightest lines that I possibly can. So you can see we had this symmetrical triangle here. Boop. And then right here, if you look at all of this, that is yet another symmetrical triangle. And then once we broke through this upper downward sloping trend line, we had this massive breakout candle right here, this green one right here. and it was on high volume, which was confirming that this was in fact a real thing. All right, let's clean that up again. Oops. Now let's move forwards too. So let's look at this again. We have a huge move away from the 9 EMA on high volume on both days, on this day and this day. And if you look at this first candle here, we moved a considerable amount, right? If you look at the high, it was had a high of 1865 and a low of 1468. And then the following candle, we had a high of 2097 and a low of 1750. So the second candle was on higher volume, but it didn't move nearly as much as it did the previous day. And it was on higher volume. So that's showing that sellers are stepping in yet again, either short sellers or people who are buying and they want to sell their shares. And quite frankly, I can't blame them because, again, going back to this concept of mean reversion, look where the 9 EMA is and look how extended that price is. That is huge, right? So what do we get, right? We have this high here, price drives down, reverting to the 9 EMA, have a consolidation, price tries to go all the way through the 9 EMA, buying steps back up, right? Mean reversion taking place right there. Have this, and we try to retest this previous high, creating a double top. So at this point, you're kind of like, this may not necessarily be a good thing, right? Double tops are usually, especially at the top of a trend, an indication of a reversal. And that's pretty much what this stock tried to do, right? I'll go back to my pencil here. Let's clean up the chart again. So after this double top, had this big red day right here, right? Go back to my pointer. However, compared to these 2 days, volume had dropped, right? You can see volume had dropped there. So this is actually a bit of an anomaly in terms of volume price analysis, but again, separate video because that is a concept all unto itself. Let's clear this up. You can see at this point, this candle right here, the trend came down to this area here, which was prior supply, and now it's become demand, which is a very important fundamental concept in technical analysis. If you have a resistance area and the price breaks through it with strength, that resistance area will become supply, and vice versa. It works the other way too, right? And again, it didn't come exactly to it because supply and resistance areas they're like zones, right? They're not exact lines. It's a bit of a range, right? But it did more or less come down to this area right here, which showed that we had a bunch of buyers who were waiting to get in at a lower price, okay? So price got pushed back up. You can see we chopped around, consolidated a little bit. Volume was dropping during this point, which is typical of consolidations. And it looks like, yet again, we had another symmetrical triangle, which was forming. And again, consolidation. As well, we had a double bottom, right? With the second low being higher than the first. So that's looking pretty good. So we have this resistance area right here. And then you can see on this candle right here, big expansion of volume, right? Relative to the previous days. So let's just take a look at that. So you have this volume down here, and then the volume spiked with this big candle here. So that's showing a very strong move, right? It's showing that there's a lot of buying coming in that is supporting this move, indicating that it's legit, it's the real deal, right? Now you can see here, once we got to around $20, we hit a crap ton of resistance, and price just basically, it was going all over the place. But again, the lows were getting higher. You know, we've got resistance right here, but buyers are coming in, getting ready to push it back up, and then finally broke out on massive volume despite, you know, this low area of volume here. And again, right, when you have a consolidation area, you're gonna notice that the volume is low, right? Huge candle, huge volume. So this is looking good. All right, so let's move forwards. So now we're more or less into October, November. And let me just adjust my chart. Okay, so it's funny looking at this in perspective, right? Like how big these candles are, and then we still have, you know, these massive, massive candles into the future. So I'm just going to readjust my chart yet again and go back to where we were. Cool. So big volume, big candle. And then we had new support at $30. Came up, tested that, you know, good 3 times here. Pulled back, and you can see right here with the low of this candle, I mean, I've kind of blocked it with my marker, had buying coming in here, and we actually came back and retested that. Next candle was a bullish engulfing, pushed us up, and then on this candle right here, let me clean this up, it's just getting messy. This candle right there, if you look at the volume had been low during that consolidation right through here. Just to clarify, I'm talking about this area right here. On this candle with this arrow, right? Big increase in volume, showing some really good stuff. And if you look here with this line that I've drawn, I'm going to actually erase that and I'll use this. You can see buying volume starting to increase again. In this area, it did pull back. So let's move forwards a bit. I'm going to go back to my pointer. Move the chart on up. So going back to that point that I'm pretty sure I made previously, you want to see an expansion of volume in the direction of the trend. So if the trend is going up, you want to see volume going up. Now, if the trend is going down, volume can also go up as well. It's important to realize that. The point is, you just want to make sure that volume is expanding with the trend, right? If there's a trend going up and volume decreasing, that's not a good sign. So let's go back to my marker. So you can see pretty steady here, a little bit extended. Starts to really chop around at this $45 point. Came back, tested the 9 EMA, pushed up through to 48, and then on the next day, we actually pushed all the way up to $54, right? And again, going back to mean reversion, if you look at the 9 EMA down here and the price all the way up here, that's a huge difference between price and, or the current price rather, current price meaning, you know, up here compared to that average price. So what's going to happen, right? Price is going to come back and snap back, revert back to that 9 EMA. Okay, so let's move up a little bit more. Now you can also see that a lot of these candles have long lower wicks. So you know buying is coming in, sellers are trying to push it down, but they can't because that buying is just so damn strong. So this is a really good thing. Now it was also, clean up my chart again, around this point, around in this area here where Citron did their hit piece on NIO, saying that, you know, the current price isn't sustainable and the price was going back to like $20, something like that. And that basically drove the price down and, you know, brought us more or less down to the 50 EMA here. However, obviously the market completely disagreed with Citron, which, you know, it's fine. And, you know, again, buying came in and we created this double bottom here, pushed up, and we had resistance here, which makes sense, right? Because, you know, if you look at these previous day here, we couldn't really break above, like, what is that, $50? So it makes sense that we would come up and test that again. But look, right? We have this double bottom, tested that resistance, got pushed down, and now we have a higher low. So buying is still looking good, right? Even though the 9 EMA and the 20 EMA have kind of merged and the 9 was starting to cross down past the 20, which some people will use as an indication to go short. The 50 EMA was still going up. The long-term trend was still intact. So once this happened, you can see here, we continued on up. And if you look at this day, and this day, we had resistance in that area. The price was also extended. So again, mean reversion took place, snap back to that 9. and then we pop back up. And now, just recently, we created a high of $67, which at the time could not be supported because again, right, 90 EMA is here, price was way up here, which really extended the price, right? When the price is really extended, buyers are going to sell and short sellers are going to join in on the fun, right? So you can very well expect that you're going to see, you know, either some consolidation take place and things are just going to go sideways, or the price is going to snap back to the 9, which is exactly what happened on this day and this day, until we get to a supply area, which again, previous resistance becomes supply, or sorry, previous resistance becomes support. And that's what happened, right? Buyers came in, $55, pushed the price up back up, creating this, I guess you could call that like a morning star candle or a doji, however you want to name this candle right here. Let's clean this up. So we're now into current day, more or less. You can see we have support here, which makes sense because we have support there, which makes sense because we have support there, which was previous resistance. We had resistance at $60, and on the last day that NIO traded, we actually broke above that on an increase in volume. You can see right here this last day. Previously, we had decreasing, we had decreasing volume, and now volume is beginning to increase. So what I'm looking at right now is we've got resistance here just under 65, and we definitely have resistance at 67. So given what's happened in the past, when the price became extended, what we'll likely see is this will either continue to go sideways and chop. We might pull back slightly and then continue on up. And then once we get up to that 65, we might pull back slightly and then continue on up. Or what might happen, and there's honestly an infinite number of possibilities, right? We might just like ram right up to 67, you know, pull back from there, come all the way down, and then maybe consolidate in this area for a bit before moving higher. Who knows? Anything goes. But what I am seeing is there definitely being a lot of buying. There's a lot of enthusiasm for this stock. If you look at NIO's competitors or NIO's competitors, LI and XPEV, also Plug, so on and so forth, for the most part, they're all seeing an uptrend. So there is a growth in the overall industry of electric vehicles, right? And also just thinking long term, right, into the future. Is humanity really going to use fossil fuels to power our you know, cars for the rest of time? Probably not. You know, it makes sense for electric vehicles to take place, right? For that industry to grow and to expand. And that's pretty much what's happening, right? Tesla is doing well. NIO is doing well. You know, so on and so forth. So given those economic factors, along with what we're seeing in the overall price action, I definitely think, and again, this is just my opinion because I could be totally wrong, I definitely think this has way more room to grow. Another factor I want to take into consideration too, and I'm going to share with everyone, is this. So one thing I've also been paying attention to are what the analysts are saying. Now, I personally don't put much stock in what any one analyst says, but when there is a whole bunch of analysts who are commenting and saying, you know, like, yeah, this is worth this price, and they're steadily but consistently raising those price targets, that to me is showing is that there's a lot of institutional interest in the stock. And if institutions are buying, I want to be buying. Now, another thing to support that further, if we look at ownership, we can actually go into the trade log and we can see, right? We've got major institutions who are buying this stock up like mad crazy, right? We've got Vanguard, which is huge mutual fund. We've got Credit Suisse, Danske Bank. Let's see, who else? I think I can scroll down, right? There is far more buying going on of these institutions than there is selling, right? And if they're still buying, then basically what that's saying is that they think the price is going to go up, right? So where the smart money is, I want to be too. So all that in consideration, the prior price action with the price expanding away from the 90 EMA, contracting, support coming in, support consistently moving up, with NIO's sales consistently increasing. That was something I didn't mention before. Their sales are consistently increasing. Soon they're going to be net positive with their bottom line. They've been taking a smaller and smaller and smaller loss each quarter, which is fantastic. Like once this company is profitable, which will be probably in the very near future, I only see good things for this stock from my perspective. So that's my 2 cents on NIO. Hopefully it was helpful to you. Leave a comment in the comment section if you have any questions, or if you have a different opinion, or if you agree. Let me know, because I'm curious to hear what other people have to say. Anyways, that's it. Take it easy.